Hey everyone, and welcome to This Explainer. Today we're diving into something absolutely crucial. We are decoding wealth creation, but specifically designed for the unique and, let's be honest, often really harsh realities of emerging markets. If you live in Africa, Southeast Asia, Latin America, or really any region dealing with economic uncertainty, you already know the deal. Those standard textbook financial playbooks, they just don't work the way they're supposed to. So we're going to break down the core principles from the African Wealth Code, and we're going to turn everyday survival tactics into a legitimate strategic blueprint for financial success.
So let's just get right into it. Why does traditional financial advice totally miss the mark for so many of us? I'm sure you felt that frustration, right? You pick up some famous wealth-building book, and it just feels entirely disconnected from your actual everyday reality. It assumes all these things about your environment that simply aren't true for where you live. You're out here trying to build a future, but the tools you've been handed were literally made for a completely different world.
See, conventional wisdom assumes you're living in a perfectly stable economy. Low inflation, a currency that holds its value, super predictable jobs. They'll tell you to just keep your money in cash. But in emerging markets, reality hits way differently. Prices can literally double in a few months. Currencies drop out of nowhere, and the business landscape is just wildly uncertain. Think of it like farming. A farmer in the desert and a farmer in a rainforest are both trying to grow crops, but they absolutely have to use different methods. Financial management works the exact same way.
Okay, so here's our roadmap for this explainer. We're going to cover the emerging market reality, then how to build financial stability first, creating multiple income streams, protecting against wealth killers, firing up those engines of wealth creation, and finally, leaving a generational legacy. It's a complete journey from just getting by to building lasting wealth.
All right, kicking things off with part one, the emerging market reality. Because let's face it, the rules here are just different.
We have to face our environment head-on. Inflation, currency depreciation, unstable incomes, and a lack of access to traditional investments. Look, you cannot win the game if you don't know the rules of the board you're playing on. That old formula, get an education, get a secure job, and just cruise into retirement? Yeah, scratch that. It's broken. It simply doesn't guarantee wealth anymore. We need a new wealth formula. It starts with acquiring skills. Those skills generate income. You then use that income to buy investments. Those investments eventually turn into assets, and those assets, that's what actually builds your wealth. It's a massive paradigm shift.
There's this really powerful quote. Income is what you earn. Wealth is what you keep, grow, and own. People get this mixed up all the time. They think having a high salary automatically makes you wealthy. Not true at all. A person earning, say, $500 a month who consistently saves and invests can actually end up way wealthier over time than someone pulling in $5,000 a month who just spends every single penny. It's all about ownership, not just what's on your paycheck.
Moving right along to Section 2, Building Financial Stability First. This is all about laying that strong foundation.
Look, trying to build wealth without stability is basically like trying to construct a massive skyscraper on weak mud. Eventually, the cracks are going to show and the whole thing comes crashing down. So what does true stability actually look like? Well, take poor cash flow. Imagine someone earning 700,000 naira, but they're spending 750,000. Now compare that to smart cash flow. Someone earning just 300,000 naira, but only spending 250,000. That second person is actually in a much, much stronger financial position. Getting your cash flow under control, living below your means, and fighting off lifestyle inflation when you get a raise, that matters infinitely more than just chasing a bigger gross income.
And a huge pillar of that stability is your emergency fund. Life is incredibly unpredictable. Jobs disappear, medical emergencies pop up out of nowhere. So, here are your milestones. Start by saving up just 1 month of expenses. That's your initial goal. Once you hit that, push for the medium-term goal of 3 months. And finally, aim for 6 or more months for maximum protection. This isn't just about sleeping better at night, it's about giving yourself the breathing room you need to take calculated wealth-building risks later on.
Okay, on to Section 3, creating multiple income streams. This is where we build serious financial resilience.
For generations, we were all taught to depend on a single job, right? Well, in today's world, that is dangerously risky. If that one income source disappears, you are instantly in a crisis. Instead, you need to build resilience across 4 different categories. You've got your earned income, that's your active work like your salary or freelance gigs. Then there's business income, like selling products through an online store. Investment income is where your money actually works for you, giving you things like dividends. And finally, digital income, where you leverage tech for content creation or affiliate marketing. Now, you don't have to launch all of these tomorrow, But ordinary people can absolutely use the skills they already have, whether that's writing, graphic design, or video editing, to unlock these different streams step by step.
Next up, Section 4. We need to talk about protecting against wealth killers.
You know, you could literally do everything right. You could earn more, build multiple income streams, the whole shebang. But if you aren't playing defense against the biggest threat in emerging markets, your wealth is just going to erode. I'm talking about inflation. It is the silent destroyer of wealth. It's the gradual increase in the price of goods and services over time, which means your purchasing power is literally shrinking. If inflation in your country is running at 15% a year, but your savings account is only giving you 5%, you are effectively getting poorer every single day, even though you're doing the responsible thing by saving.
Let's anchor this with a real-world example to really put it in perspective. Let's say 10,000 naira buys you 10 bags of rice today. Fast forward to next year, you take that exact same 10,000 naira to the market, but prices have shot up, and now it only buys you 8 bags. Your money just lost value. This is exactly why you cannot just store your money under a mattress or in a basic account. You have to put it into productive assets, businesses, or real estate, so it grows faster than inflation can eat it.
All right, Section 5, Engines of Wealth Creation. Now we are going on the offensive. Now that we've got our defense sorted out, let's talk growth. Compound growth sounds complicated, but think of it like planting a tree. That tree grows and eventually produces its own seeds. Those seeds fall to the ground, and guess what? They become additional trees. Over time, the growth just accelerates. When it comes to investing, time actually matters way more than the amount of money you start with. Time is the magic ingredient that allows small, consistent investments to snowball into massive wealth.
Now, a big part of modern wealth creation involves the digital economy and things like Web3, which lets anyone participate globally. It's an amazing opportunity, for sure, but you have got to protect yourself against the red flags. Are they promising guaranteed profits? Unrealistic returns? Is there high pressure to invest quickly before you miss out? Do they promise risk-free wealth? If you see these signs, literally run the other way. The digital economy is packed with potential, but your education must always come before your investment. Don't fall for the hype.
Which brings us to our final section, number 6, leaving a generational legacy. This is about building something way bigger than yourself. This is where we really elevate our perspective. To break the cycle of generational struggle, you need to build things that are going to outlast you. We're talking about transferable assets. Think successful businesses, real estate, intellectual property, rock-solid investment portfolios, and valuable digital assets. But here is the catch. Money alone isn't enough. You absolutely must pass down financial literacy along with those assets. Otherwise, all that wealth you built, it can disappear in a single generation.
And that really wraps up our explainer for today. Listen, the future absolutely belongs to the people who prepare for it. Wealth is not a matter of luck, it's about solid principles, relentless consistency, and taking action. Start exactly where you are, use exactly what you have right now, and focus intensely on ownership. So, I'm going to leave you with this one provocative question. Your journey starts today. What are you going to build?